Yeah, demand, domestic demand looks okay. Like we will be able to achieve clear performance, but export demand will still look little slow, and we expect demand to pick up from third quarters basically.
Okay, but for the full year, there will be any growth, or we will see again a decline in FY25?
So for the as far as the entire year is concerned, we had earlier stated that for the first half of the year, first half of FY25, there will be a negative rate variance year-on-year basis, whereas the second half of FY25, the negative rate variance will go away because the prices had already fallen down in December and March quarter. So the rate variance, negative rate variance will keep on going down as we go ahead in the quarters, and hopefully with the help of dermatology products and the second product which is coming online by the mid of this year, we will get additional benefits in terms of new products will be available. So volume growth will also be quite good for the second half of the year. So we should be able to post some growth.
Okay, and in terms of specialty chemicals, are we on track that, from Q2 FY25, if the plants get commercialized, there will be a very good supply, and what kind of capacity utilization we can expect for this year, and what kind of growth we can expect in specialty chemicals for this year?
So this year, we feel that it is mainly in the second half of the year that the second segment will do well, because most products and capacities would be available for the second half. Frankly speaking, if everything goes well, we can see a 50% growth for the second half of the year-on-year basis.
In the specialty chemicals, we are talking about 50%.
Yes, for the second half, year-on-year.
For the second half, understood. And my last question is on operating margin. Any guidance? I mean, I understand that there will be a good revival in the second half, and there is one more quarter of pain. And this quarter, if you exclude that 6 crore which is sitting in the other expenses, your EBITDA margin is roughly at around 12.7, 12.8%. Second quarter, if I assume if it is more or less similar to that, what kind of margin can we expect in second half as well as for the full year?
As far as EBITDA margins are concerned, now the gross margins may not improve too much from here. This has already improved. Right now, it is somewhere around 34.1% for the standalone business. So probably by 1%, there's still a scope for improvement based on how the market demand is there. Because if the demand is less than it will be little difficult to increase the gross contribution. But if the demand is good, then the gross contribution can go up by 1% more. And with the better capacity utilization, the other expenses will become lesser as compared to sales. Right now, in this June quarter, it is very high because of the lower sales. So we hope that in the second, if you look at only the second half of the year, we still hope that around 13-14% EBITDA margins we should be able to achieve.
Okay, sir. So thank you so much. That's it from my side.
Thank you. Ladies and gentlemen, before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Ankush Mahajan from Axis Securities. Please go ahead.
Yeah. So my question is that if you see the molecule prices for ciprofloxacin, ofloxacin, levofloxacin, the antibiotic portfolio, so their prices are almost in the range of, we can say that's a flat, negative realization in the range of 4 to 5% only. But our top line is degrowth by 16%. So I mean to say that the API prices, that index is showing stability, while our revenue has declined by 16%. So could you throw some light on it, sir?
Yes. So when we say that negative 16% degrowth, and in that around 11% is negative price growth. That is a decline in selling price. That is when we compare June 23 with June 24, means year-on-year quarter. But if we compare with the previous quarter, that is the March 24 quarter, the domestic prices have almost remained same, almost same. However, we did see some decline, quite a big decline in the export prices. But the reason for that is because in exports, we typically have 2.5 to 3 months of pending orders. Order book is there. So basically, the exports which happened in March quarter, those were the orders taken in the December quarter when the prices were high. So those orders got executed in March quarter. Whereas in June quarter, the orders taken in March quarter got executed, and it was in the March quarter that the prices had fallen down as compared to December quarter, and that is the reason why we saw a decline in the prices as far as export is concerned. But as far as the domestic is concerned, because the order book is lesser than 1 month, we didn't see much price impact quarter-on-quarter basis.
Thank you, sir.
Okay.
Thank you very much. The next question is from the line of Pramod Dangi from Unifi Investment Management LLP. Please go ahead.
Yeah, thanks. So just a couple of questions. One on the export. You said that the volume was down 8% year-on-year. What would be the price variance for domestic and the export year-on-year?
Year-on-year. So year-on-year, it's almost around 10%. Export was also around 9%, and in fact, domestic was around little upwards of 12%.
Oh, okay. So domestic was down much more than the export
rate. As far as the rate is concerned, year-on-year basis.
Correct. And the domestic, you said that the volumes were flat, right? While export was down.
Volumes were flat, yeah, more or less flat, yeah.
In export, any particular region or any particular, you said about that antibiotic and the anti-inflammatory drugs had some demand sluggishness. Any particular region or any other issues which impacted the export revenue?
So there were multiple products where it got impacted. As far as one product is concerned, ofloxacin, there was a change in IP regulations, but that is to do with the domestic. I'm talking about domestic here, domestic market for ofloxacin. There was change in IP regulations, so there was slight disruption in the production because we had to change the quality parameters of the product at the plant scale. But that was a temporary setback. Then because of that fire incident, one of the anti-inflammatory products got impacted in terms of dispatches in the June quarter. So there we got impacted at the export side. And overall, for the antibiotics, for both export and domestic, ciprofloxacin, levofloxacin, they major laggards for this particular quarter.
Okay. But there has not been any particular region that few other regions is impacted more because of the currency. Earlier, we used to have that currency issues and the other issues. Was it the China or any particular thing?
So in exports, still in lot of countries, there are elections, the change in governments in this particular year. Dollar shortages, that issue had slightly improved as compared to past, no doubt about that. But the political uncertainty, the change of governments, and many of the export countries, they work on government tenders, which creates the demand for the API for exports. So probably that might also be the reason why it was slightly slower at the export side.
Okay. And on the formulation side, we have seen the significant drop in the formulation when it comes to export. So if you can throw some light on that.
Yeah, Vishwa, can you answer the question?
Vishwa sir has actually got disconnected. We are trying to connect him again. Yeah.
Okay. So see, in the formulation, overall, the export margins have been good. Means, we were able to achieve around 57% of our total formulations through exports. So exports is doing very well, and that is the main focus area for us, because that is where the margin lies in the formulation business for us as of now. In the domestic market, we are doing toll manufacturing, so it is like a value add kind of a service, but not major of the profits come from there, and probably that might be the reason. Plus, we also had a couple of audits at the formulation side. We had a US FDA audit for the oncology block, and then we had a UK MHRA audit also for the regular OSD block. So probably that was also one of the factors why the domestic production was not that high during the June quarter.
Okay.
Vishwa is now in the conference.
Okay.
Yeah. Yeah. So if I can repeat my question, we have seen drop of 33% in the formulation export.
Right.
So if you can throw some light on that, was it driven by the price variance? Was it driven by any particular region or any particular region? Because the 33% year-on-year drop was significant.
So majorly the reason for growth in formulation exports is as we are strategically reducing our domestic business and increasing our international business. So it's driven by both addition of products, as we have had some new registrations in our existing markets, and also because of some market additions, as we have entered into some new geographies and new territories. So it's a combination factor of both new products and new markets, and that we continue doing. We are investing heavily into new product developments and new launches. So over the coming quarters and coming years, we plan to continue having new launches as well as new markets opening up, which will significantly keep increasing our international formulation business.
Okay. No, but what I'm asking is, if I look at the export revenue, last year in the June quarter, we have done 60 crore rupees of export revenue, if I'm not mistaken, and this year we have done 40 crore rupees of export revenue. Mm-hmm. Is that number right, or I'm missing something over there? June to June, I'm talking about.
Okay, from previous one. So, like Adish said, one of the reasons for this quarter is, in general, the sales have been low because of lower volumes, because we had two major audits also, and we had a shutdown in one of the blocks for almost a month because we are doing some brownfield expansion to increase capacities. So it was more of a temporary short-term shutdown, and because of the audits, again, the volumes were a bit low. So the June to June, the lower sales is mainly driven because of lower volumes.
Okay, got it. Thanks. And the last question on the, that 6 crore rupees, impact on the dermatology thing. Right. Where it is adjusted? Is it adjusted in the operating cost, or is it adjusted in the COGS? Or where it is in the impact?
Yeah. So around 3.5 would be that impact would come at EBITDA level, and around 2.5 would be post EBITDA. That is the interest and depreciation.
Okay, done. Thanks. That's from my side.
Thank you.
Thank you. Ladies and gentlemen, before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Yeah, good morning and thank you for the opportunity. So I'm new to the company and I need a clarification on the export side. So at one slide there is written 33% of revenue is from export, and then we have revenue out of Asia more than 33%. So can you clarify on that?
Yeah. So okay. One is regarding the overall split of the company's sale, and when we are talking about division, it is generally percentage of the export sale. And when we say about Asia in exports, it doesn't include India. It is excluding India.
Okay. Understood. Thank you. That's all from my side.
Thank you. The next question is from the line of Kunal Shah from Nova Capital. Please go ahead.
Hi. I want to ask, are the prices for API stable or still reducing? And if so, why are these prices continuously falling? Do we see prices increasing during the year?
Harit, would you like to answer that question?
No, more or less prices are stable. Raw material prices are at bottom, and even API prices are at the bottom level. So prices are stable since last one quarter, and we expect price to remain stable for the second quarter also, for this quarter.
Okay. That's it. Just one question. Thank you.
Thank you. Ladies and gentlemen, before we take the next questions, we would like to remind the participants that you may press star and 1 to ask a question and come in the question queue. Thank you. The next question is from the line of Yug Modi from AP Capital. Please go ahead.
Hi. This is opportunity. So I just have a couple of questions. Can you give some guidance on revenue and profitability for the next 2 years?
Mr. Yug, can you come a little more close to the speaker? You're not
Yes. Now I'm audible.
Yeah, now you are.
Could you give some guidance on revenue and profitability for the next 2 years?
Yeah. So definitely, till FY27, we had given a guidance that in next 3 to 4 years we wanted to achieve upwards of 4,000 crore of revenue. We did not start well in the first quarter of current year, but nevertheless, when the demand picks up and all these capacities will be online in the second half, we will definitely be on the right track to achieve that upwards of 4,000 crore turnover. That is assuming the current prices. I'm not considering any price hikes. So more or less, assuming the current prices due to volume growth, we hope to reach to that level. And as far as the profitability is concerned, we would definitely high EBITDA margins anywhere between 14 to 15% long-term basis.
Lastly, we plan to do 200 crores of capex this year. What capacities are we expanding in this capex?
Sorry, you are asking about current year capex?
Yes.
Okay. So yeah. So current year, the 2 greenfield projects which we just completed. One is almost on the verge of completion. So the partial remaining capex on those projects, they will be completed in this year. Plus we'll be doing some brownfield expansions for the API block. Plus we are doing a lot of R&D on the formulation side. So probably on that part, Vishwa can explain better. Vishwa, would you like to answer that question?
Yes. So in terms of formulation R&D, basically we are working on new product developments for about 15 products for the various regulated markets, which is a combination of oncology as well as cardiac diabetic products. And all these products are planned for launches in the coming 2 to 3 financial years.
Perfect. That's answered my question.
Yeah.
Thank you. Participants present on the audio bridge who wishes to ask a question may press star and 1 on their touch-tone telephone to ask a question and come in the question queue. The next question is from the line of Rashmi Shetty from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity again. Adi, just on formulation business, you all mentioned that, all manufacturing business you are rationalizing and you're just focusing on the export business. So are we expecting that, sales for the formulation business to decline this year?
Vishnu, would you like to answer that?
Yeah, I'll answer that. No, we are not expecting sales to decline. What we are trying to do is utilization, keeping a maximum utilization for the export business. Having said that, the toy manufacturing we are continuing. We're just doing it for more strategic products. And at the same time, we are also undergoing a brownfield expansion in our Baddi facility, which will in the next quarter increase our capacity by about 15 to 20%, and over the next 12 months, almost double our capacity, 12 to 15 months. So we are building up additional capacities to be geared up to handle both the existing tool manufacturing business as well as the increase in the international business that we are forecasting.
You mean to say the increase in the international business will offset the decline in the domestic business? So therefore, is it possible that, domestic formulation would be giving the double-digit growth or similar growth what we have posted in FY24?
Yes, that's it.
Okay, and one more question on oncology formulation. When can we expect, sales contributing from oncology?
So we are expecting initial sales to kick in from FY26. And the majority of the sales from FY27.
Okay, got it. Thank you. That's it from my side.
Thank you. The next question is from the line of Chirag Dagli from DSP Mutual Fund. Please go ahead.
Yes, sir. Am I audible?
Yes, you are.
Yes.
Yeah, thank you for the opportunity. Adish, you had a capital work in progress of about 265 crores as on March 2024. What is that value as of now or as of June? And how much have you capitalized? Does that include the derma facility as well?
I don't have an exact number, but then the thing is, our net working capital.
I mean capital work in progress, Adish. Is the hard asset.
Okay. You're talking about fixed assets. Okay, sorry. I thought. Okay. So capital CWIP, the whatever CWIP we had mainly was to do with one greenfield project which is going on in Saika. So that will be put to use by in September quarter, most probably by the end of that. And the rest would be slightly. There are some aspects which are ongoing on the salicylic acid part too, like plot development, etc. But that will be the minor component. The majority would be the Saika one.
Correct. So that is still sitting in the book. That is not yet capitalized.
No.
The Saika capacity is still not operationalized.
Correct.
Understood. And when that comes on stream, how are you thinking about when that comes on stream?
So when that comes on stream, it will help us in increasing our spec chem product production capacity, and another thing is it will lead to backward integration for our diabetic product. So that will also help us improve our margins in the second half.
Understood. And I also remember that you were putting additional metformin capacity. Has that come up?
So right now we are still at around 1450 tons per month. We are in the process of increasing that to around 1700 to 1800 tons per month shortly. But that will require some environmental approvals, I feel. We are doing that with the help of a slight process change. So it is the work is going on. We already have taken validation batches as well. So, but then we will have to, move all the customers to the newer process. So that might take a little bit time.
Understood. And do you have a guidance for volumes in FY25 and 26 for the API business?
I believe we were looking when we started the year, we thought that the salicylic acid plants will also start contributing right away from the Q1. So that has not happened. Plus, there was some subdued export demand in the API space. But if that had not taken place, we were expecting around 14-15%, around that much, targeting at least. But let's say for the second half, we will still try to achieve that, at least for the half of the year-on-year basis.
The second half, you're saying you'd come back to that mid-teens volume growth. First half,
first half would be like almost flattish because we had a bad first quarter. But second half, we should be able to get that much growth.
Then for the full year, high single digit volume growth is how we talk about.
Correct. For the entire year.
Understood. And like you mentioned, Harit mentioned earlier in the call, that API prices are today at bottom or closer to bottom. Would you say the same about your spreads as well?
The spreads in the sense of gross contribution?
Correct.
Yeah. So because the API prices are lower, ideally the gross contribution margin I'm saying, should be highest. So that is the reason why our gross contribution margin has been improving quarter-on-quarter basis. In fact, despite of the lower EBITDA margins, our for the standalone business, the gross margin has actually improved with respect to March 24 quarter. So it is now reached almost 34.1%, and our target would be around 35% for the standalone business as far as the gross contribution margin is concerned.
No, but Adish, we should look at it on a per unit basis. And there, would you say that our per unit profitability, whatever per ton, profitability.
Understood. That should not change on a composite level.
But no, would you say that number is at lows, cyclical lows?
If I look at the data, it is not. For some products, it is actually better in last five quarters put together, actually. But in some products, it is a mix, actually. In some products, it is good. It is, in fact, one of the best in last 5 quarters in some products, in 5, 6 products. Whereas in some products, it is like in the average region. I would say, from median standpoint, it will be right in the middle of 5 quarters. It will be the second or third place in terms of absolute gross contribution per kg. So that is not impacted. So that is actually well on track. The main problem what happened this particular quarter was lack in volumes, actually.
Understood. Okay, Adish. Thank you so much.
Okay.
Thank you. The next question is from the line of Pramod Dangi from Unifi Investment Management LLP. Please go ahead.
Yeah, thanks again. Just on the specialty chemical, you said that H2 should have a 50% year-on-year growth in the specialty chemical. I believe dermatology and the new, salicylic acid revenue is part of this, right?
So the thing is, salicylic acid has multiple uses. So in some cases, it goes for nutraceuticals. In some cases, it goes as an intermediate for pharma, for aspirin. And in some cases, it will go for as a you can say chemical to manufacture another cosmetic products. So it will be a mixed bag, but majority we are banking on the Saika project on that.
Okay. And dermatology will be part of which segment API specialty chemical?
Yeah. So it will. So a part of salicylic sales would be API.
API. Okay. And the new plant which we are starting in September, that will also contribute to this growth, right?
Yes, correct. That will contribute to spec chem growth.
And then what is the, you just said that the growth in the H1 volume-wise it will be flat. In the quarter one it is already 5% down year on year. But H1 you are saying overall the growth will be flat. What will the price, any guidance on the price variance in the H2 or the H1 or the second quarter? How it looks?
So, when we started the year, we were expecting around roughly 8 to 10% price degrowth for the first quarter, for the first half of the year, H1, not quarter, for the H1.
Okay.
That was our estimate.
Okay. And that's slightly ahead of that actually, right? 10, 11% or 12% kind of.
Yeah, for Q2 it will go down actually. Q1 the impact was max. We were estimating maximum impact because the prices has reduced on sequential basis quarter on quarter. So the September 23 prices were lower than the June 23 prices. So that is why September 24 versus September 23, the variation will go down, the negative variation.
Right. Got it. And this API, as we seen, the significant drop in the volume for the export, almost 9%, what you said. Is it now recovering in the Q2, or is still the Q2 may also have some similar kind of because my question is guided towards the contribution margin. After 6-7 quarters where we were making more than 210 crore rupees contribution per quarter, this quarter it was I think lowest in the last 7-8 quarters.
This quarter we will be around 197 or so.
Correct. Which is lowest in the so will that export volume will impact the Q2 also? We will see the same improvement over there in terms of the volume for the export.
Haritha, would you like to answer about exports for Q2?
Export Q2 also we feel subdued demand as of now, and moreover there is freight rates have just moved up again, like COVID levels now. Some containers are not available and all that such situation is there. It's not related to Red Sea actually, but some other things. So overall, we feel Q2 will be similar to Q1 in exports, and the demand will start coming up from Q3. It looks like as of now.
Okay, great. Thanks. Yeah, that's from my side. Yeah, thanks.
Okay.
Thank you. The next question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Yeah, thank you for the opportunity again. So I have a question on margins. So before COVID, our EBITDA margin was used to be in the range of 15 and 16%, and right now it is around 11 to 12%. So what is the reason behind that?
So the most important reason for last two, if you talk about last 2-3 years, in COVID it has gone up. It was phenomenally high, but that was exceptional. But if we compare with respect to pre-COVID era, like you said, 15 to 16% EBITDA margins were there. What had impacted the EBITDA margins for last 2 years was that the raw material prices had gone up sharply. Because of that, it kept going up. And after reaching a certain point, then it started crashing as well. So there was a lot of volatility. And because of that volatility, we were not able to sustain our gross contribution margins. Right now, our gross contribution margins are reaching to a certain you can say our targeted levels. We are still 1% away from that. However, for this current quarter, our volumes were quite low, and because of lower operating leverage, the EBITDA margins were lower. What we feel, had our volumes been decently good, probably we would have achieved around at least 14% EBITDA margins for this quarter if our volumes were good. So that is why now we feel, and obviously the industry has also changed quite a lot since pre-COVID era to now. However, we are trying to register more and more products in European market and try to increase our European sales, because one of the important, you can say, differentiation of today's sales versus 5 to 7 years back sale is that our export was almost 38-40% at that time, which is right now around 31, 32, 33% to the total standalone sales. And in export, generally we get higher gross contribution. So that is also one of the reasons why the margins had got impacted.
Yeah, understood. And my next question is regarding our new product development. So, what could be the potential of these products, especially that oncology product that we are developing?
Yeah, Vishal, would you like to answer oncology?
Yeah, sure. So yeah, we are developing about 15 oncology products over the next 2 years. And our total budgeted revenue at peak revenue for the oncology segment is about anywhere between 300 to 400 crores, depending on launches and the market share that we get. So yeah, hope that answers.
Yeah, understood. Thank you and the best.
Thank you.
Thank you very much. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to the management for closing comments.
I would like to thank everyone for joining us today on this earnings call. We appreciate for your interest in Aarti Drugs Limited. If you have any further queries, please contact us directly or SGA or Investor Relations advisors. Thank you and have a nice day.
On behalf of Aarti Drugs Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.
Thank you.